Hello stock traders, I hope all of you are having a great day, and in today's video I'm going to break down why and reasons of why the market has been moving up in the very short term here lately, and then also give my opinion overall on the stock market. Going to give a bullish and bearish case for where we are right now. Also later in the video I'm going to share with you a stock that I'm going to be looking at entering on Monday morning that I like due to lots of insider activity. But before I get going, if you could do me a favor, please hit that most amazing and wonderful like button. Also, if you have not done so before, please subscribe and turn on those bell notifications so you get notified when a new video comes out. Now, here in the last couple of days, especially on Friday, the market bounced off the 200-day moving average. Now, this is usually a very bullish occurrence. We came down to that 200-day moving average as there was more issues with banks on Friday, but we saw a major bounce. And also there are some retail traders out there and some different traders who think that no more rate hikes is a good deal, and they're betting that we don't have rate hikes moving forward. I think that this is a flawed idea. I'm going to kind of talk about why. Okay, so I am actually very bearish on the market. I think in the long term that the stock market and the economy is having issues, and so I'm in the camp that things aren't looking so hot, but I am waiting for price action to prove me wrong. And I'm going to show you the different chart that I have up here. This is the S&P 500 SPY ETF. So you can see we have this downward channel here, and ever since we hit this overbought level on the RSI, this is the daily chart of the S&P 500 SPY ETF. And so this has been moving downwards, and at these points, when we've kind of come up to these points after this initial point here, once we got down to here, I started shorting the market once we hit these, and I'm going to kind of talk about that later, how I did that. So I think that there is more inflation coming. I really hope that there isn't, but that all this easing and all this monetary easing that we have going on here very lately to support banks, I think is overall bad for the economy and overall bad for inflation. So we could see a very high CPI print coming up this next month, and so this is one thing I'm kind of watching for. The other thing is that whenever we get to one of these levels here, I guarantee you there's going to be other bears out there who short the market at these different levels. And so these are some things to kind of watch for. You can see this bounce that I was talking about earlier from the 200-day SMA and how we bounced upwards off of that. Also, you know, the value of our dollar is definitely being devalued, and so our buying power is going down, and that is not good. And also, you learned in the Fed's speech, he talked about a credit squeeze incoming and how monetary and how policy with different banks, how it's going to be harder and harder to get loans moving forward. This is not a bullish thing for the stock market because companies rely on funding in order and being able to dip into funding and do so easily. If there's a credit squeeze, there are a lot of companies that won't be able to borrow, and so they will have to make tough choices, which is layoffs and so on and so forth. So that is really not good for the economy moving forward. And so the other thing is that we've had an inverted yield curve, and every time there's been an inverted yield curve, we have seen a recession, and that is something that could be upcoming, and so something to watch for also. Now, so I have been buying SPXS as we hit these higher levels here, looking for a move down to this bottom level. Now, I'm not doing my whole portfolio. Right now, I'm about 50-50. I'm bearish 50%, bullish 50%, and I'm buying stocks with significant insider activity with the other 50% of my portfolio. And just kind of playing it out. I know that stocks with insider activity that's significant will outperform the market over a long period of time, but not looking good for the overall market right now in the different conditions. I don't feel confident on that. But if we saw and closed above this red line that I have here, this directional part, this upper part of this channel, then I would start to look at, okay, well, maybe I was wrong on that because that is definitely possible. And if we were to break above that and be above it for 2 consecutive days, I might look to cover that position and take a loss and move on. So this is kind of what I'm looking at. If we break this is the 200-day moving average right here, this white line right here. Breaking this is a big deal, moving to the downside. I could see us move down to the lower part of this channel. And I have some different targets here for this, and I'm hoping this doesn't happen. Of course, I hope the market does well. I just don't feel good about our macro environment at all these bank issues and everything that's been going on. This is the 1969 bear market. This was the drawdown from the top. If it was to match the 1969 bear market, that's not that far away. This is an open gap. Also happens to be an open gap on the S&P 500 SPY ETF right here at 326. So that's something to kind of think about. The 1974 crash, which has very similar conditions to what we're in right now. In 1974, we had high inflation. We had a lot of these same type of conditions, but we didn't have, right now, we don't have unemployment. And that's the thing that we had in 1974. So if you saw the unemployment move up, I could see the VIX spiking way up. Because the VIX moves up in times of volatility, and it's moving all the way down here. This would be my absolute bottom price target. I would be a big buyer in the stock market if we got down to 275, and so that's on the S&P 500 SPY ETF. So those are some things that I'm kind of looking for. We're a long ways from that right now. I'm hoping that the market doesn't roll over, that doesn't happen, but not feeling good about different things and the way it's looking with the downward channel, so on and so forth. Bulls are getting bullish here, but bears are waiting right here, and we could see a move down from there. So anyway, let's get to this stock. Let's get to some good news. There's a stock with really good insider activity that I was excited about on Friday, and so looking at it for an entry point on Monday, you might take a look at it. Do your own due diligence, of course, but I'm going to kind of talk about ticker symbol UEC. And this has had multiple officers go in, and also we have this gap up here. Even though it's a small gap, we do have a nice little gap here that I'm looking for a move up to. Oh, boy, is that a gap? That barely looks. It looks like we wicked in there. Not much of a gap. So I don't know. That might be a gap there. But looking up around the $3.17, $3.20 range, that would be a nice move up from where we were at. But we've had multiple insiders buying in open market. So I'm going to show you that coming right here. So as you can see, we have UEC, Uranium Energy Corp right here. The executive vice president purchased only about $52,000 worth of shares. We have a director here purchased $100,000, and the president and CEO purchased quite a bit, kind of coming up here. But like multiple officers at open market, you see these are open market transactions of different amounts, all on the same date. And it's almost like they came from a meeting and then decided their company was bullish and put some money in. And so I like those type of situations. So I'm looking for this to make a nice move on Monday morning. And hopefully you can take a look at it, and if this fits what you like, then you might invest in it. And this should be a good mover for us. Counter should do very well. I wish you all the best in the stock market. If you are interested in my insider callouts, a great place to be is my Patreon group. I have a link in the description down below. I wish you all the best, and Raythoven out.